The price will go up in few minutes. Set the stop loss at the 200 EMA here. Then set the take profit 2 times above the stop loss. So, it's time to see how this trade performs. It turns out to be a profitable trade. Hey traders, welcome to the Hyper Trade YouTube channel. In this video, I'm going to reveal one of the best and highly profitable trading strategy. The strategy I will be using this time is 1-minute divergence indicator system. This strategy can work with any kind of market. For example, you can use this strategy to trade Forex, cryptocurrency, stocks, or even gold. This strategy will be easy to use and beginner-friendly. Anyone can trade and start making profits with this strategy. Please watch this video until the end to see how much profit we can make by using this strategy. Don't forget to smash the like button and subscribe to the Hyper Trade YouTube channel so you don't miss out the new strategies from Hyper Trade YouTube channel. In this strategy, we will need 2 indicators. The first one is EMA with the length of 200. The second one is Divergence Indicator. Our first indicator is EMA or Exponential Moving Average. In TradingView, this indicator is called as Moving Average Exponential. Please add this indicator into your chart. Do not forget our custom parameters. We will need to change the length to 200. As you can see, this 200 EMA works as our main trend indicator. To use this indicator is simple. If the price is above this line, it means the market is in uptrend. When the market is in uptrend, we should only enter a buy or long trade. But when the price is below this line, that means the market is in a downtrend. When the price is downtrend, that means we should only open a sell or short trade entry. This 200 EMA works as our main trend indicator to filter out bad trades. Our second indicator is Divergence Indicator. You can find the Divergence Indicator in the TradingView Indicators list. Add this indicator into your chart. This time we are using custom parameters. Please follow me. First, set the pivot lookback right to 0. Then make sure all of the 4 boxes here are checked. Now you are ready to go. As you can see, the indicator we have below is Divergence Indicator. It calculates the divergence from the RSI or Relative Strength Index. The basic usage is simple. When the indicator gives us a green signal, that means the price is bullish, which means the price will likely goes up. In the other side, when the red signal appears, that means the price most likely will go down. But we have a problem. The problem is using this indicator alone gives us many false signals that will lead us in getting losing trades. That's why we need an indicator to filter the bad trades, such as 200 EMA. As we can see in our chart, now we have all the indicators needed for our first trade. Let's get into our first buy example. Our buy conditions is very simple. We need our divergence indicator to show a green signal, and at the same time, the price must above 200 EMA. As we can see in our screen, the divergence indicator shows a green signal, and the price is above 200 EMA. We should prepare our long trade here. Set the stop loss at the 200 EMA here. Then set the take profit 2 times above the stop loss. So, it's time to see how this trade performs. It turns out to be a profitable trade. Very great. As you can see here, the strategy makes profit for the first time. We have shown our first long trade that was so good, but that was not enough to prove the profitability of this strategy. Because of that, we will have our second long trade. Let's find out together. This time we have our second long trade entry here. You can clearly see the divergence indicator shows a green signal, and the price is above 200 EMA. It's our time to enter a long trade again. Set your stop loss at below the pullback or at the 200 EMA line. Then set take profit 2 times above the stop loss. Let's find out the results. This trade turned out to be profitable. We just found a strategy that has a high profitability. But so far we have only tested the long trades. In the real market there, people may want to also trade short with this strategy. How about short trades? Let's move into example short trades. This will be our first short trade example. Our conditions is actually a reversed version of our long conditions. The divergence indicator must give us a red signal, and the price must below 200 EMA. As we can see in our screen, the divergence indicator gives us a red signal, and the price is below 200 EMA. We should prepare our short trade here. Set the stop loss above here, then set the take profit 2 times below the stop loss. So, it's time to see how this trade performs. It turns out to be a profitable trade. I know that one trade is not enough to show the profitability of this strategy. Let's get into our next short trade. We have our second short entry here. You can clearly see the divergence indicator gives us a red signal, and the price is below 200 EMA. It's our time to enter a short trade again. Set your stop loss at above here, and set the take profit 2 times below the stop loss. Let's find out the results. This trade ended up being profitable. We've just discovered a highly profitable trading strategy, both for long and short trades. However, traders should not rely solely on these results. Instead, they should backtest the strategy with historical market data. Backtesting usually takes around 100 trades to be completed. After backtesting is done, if the strategy is still profitable, traders can move on to paper trading. Paper trading is a trading simulation where traders can practice buying and selling without risking any real money. If they win a trade, they don't make any money. But if they lose, they don't lose any either. There's a lot that goes into this strategy, such as backtesting it up to 100 trades and streaming my paper trades live. If you're interested for more strategies, consider subscribing to the Hyper Trade channel. Stay tuned for our next video and thanks for watching.